Stock market versus real estate market, the battle of the ages. Okay, maybe not that dramatic, but just roll the intro. Hello everyone, so nice to see your smiling faces. If you're new here, welcome. My name is AlexBeltran and I talk about tricks, tips, techniques, and everything real estate lifestyle. So, if you're in the real estate business, aspiring to join the real estate business, or you just want some guidance or references to everything that the real estate industry encompasses, go ahead and smash that subscribe button. Let's jump into it. So this video is a little more for the intermediate investors, someone who already has a couple of investments going on, you have a basic understanding of the money markets, and now you're just trying to strategize your next financial move, or as Cardi B likes to call it, making money moves. Alright, yeah, that was pretty bad. It's better if you just listen to her song instead. And let's face it, a lot of the strategies to choosing a good stock and a good investment property are, relatively the same. A lot of people in this point of their investment career, they come across this question. Real estate or stock market? Which is better? So what I'm going to do in this particular video is break down the pros and the cons to both real estate and the stock market. Now, I'm going to keep this very basic. I'm not going to do a deep dive into either one of these subjects because if I were to take that route, we would be here for a very long time. I mean, just look at Security Analysis by Benjamin Graham and David Dodd. In case you don't know, this is the book to read if you are serious about investing into the stock market. Look at how big this thing is. It has taken me several months to read this book, and I still haven't finished it. And I'm an avid reader, but there's so much information in this book that you have to take a step back and just kind of let it sink in. And for real estate, it's so diverse that one book is just not enough. But in all honesty, both are actually relatively easy to understand and put into practice. So don't be intimidated by either. Now at the end of this video, I will give my personal opinion and what I'm personally doing and the route that I'm taking in the future. Everybody is different. What works for me may not work for you. There's no default template for success, but with knowledge, you can put yourself in a better position to succeed. If that sounds interesting to you, then let's proceed. Now let's start off on the stock market side. So pros of the stock market. Number one, super easy to get started. You can open up an account with ease. There are places like Vanguard which offer no frills and very straightforward investing options. Or you can open up apps like Stash, Acorn, and Robinhood. I'll go on ahead and link these in the description down below. Find out which one works best for you and get started. Number two, it's a liquid asset. Let's say you invest $10,000 into the stock market, but then suddenly because life happens, you need your money for emergency reasons. Well, you can sell the position, wait the 2 days that the SEC requires to finalize all sales, and then however long it takes for the funds to reach your bank account, and boom, voila, you have your money back. Pretty easy. Number three on the stock market pros. There's no work on your end. And what I mean by that is that you don't have to do the day-to-day operations of the business that you were investing in, hiring, firing. You just get to share in the profits. You don't have to work for the company that you're investing in. Number four, the stock market price is the price. It's pretty easy. If you buy a stock for $5 and now it's worth $6, when you do decide to sell it, you're going to sell it for the price that it's valued at. Number five, limited tax advantages. As always, talk to a tax professional for all the up-to-date tax codes and how to maximize them. Some of the basic tax breaks that you're getting when you invest in stocks are long-term capital gains tax, which is when you own a stock for longer than a year and sell it at a profit. You also get taxed on a smaller rate from your work income on dividends that the stock pays out. And now, the cons. Number one on the cons list. You have no control over the business that you invested in because you only own that company on paper. Yes, you have a vote and you can make your voice heard in the annual meetings, but if an incompetent CEO drives that company to the ground and declares bankruptcy, you really can't do anything about it. Number two, there is a yin and a yang to everything. If you recall, on the pros side, it's easy to value. Well, on the cons side, it's easy to value. The stock market is moving up and down every second, which is why you hear so many stories about these supercomputers buying stocks and reselling them in milliseconds before you have the ability to buy them yourself. These fluctuations in the market also cause people to panic. Because let's face it, no one wants to lose money. And if you see your stock worth 25 cents less than what it was in the morning, you freak out a little, which turns into emotional investing, and that is no bueno. Number three, limited tax breaks, especially in comparison to real estate. In a little bit, you'll see exactly why real estate dominates the tax code. Number four, and I touched on this a minute ago, It's easy for anyone to get started, meaning that a lot of people that are investing can and usually are investing on an emotional level. How does this affect you? Well, let's just say you invest in company ABC123. And ABC123 sources all of their materials locally. They have zero international trade. But these tariffs that are being imposed on foreign countries spook the entire stock market. And even though company ABC123 has zero to do with these tariffs, the stock price might still fall because of the effects of the entire stock market. Number 5. It's hard to understand how stock prices are priced. Once again, I'm not going to take a deep dive into this, but let's face it, the average person doesn't understand how Wall Street values these stocks. Yes, I'm sure if you have a PhD in economics or have been doing this for a while, you can give a pretty basic outline of how they do it. But that's not the case for the average person. Now over to the real estate side. Number 1, it's a physical asset. You can touch it. You can walk into it. You can walk on top of it. You can manage it however you want as long as it is zoned to do so. You can purchase the property, live in it, rent it out. You can upgrade it. You can flip it or just let it sit there. It's all up to you. Number 2, the ability to create cash flow. So when you buy a property, there will be bills that need to be paid. Well, if you get a tenant, then they will pay that for you with a little thing called rent. And after all the expenses are paid for, whatever's left over goes into your pocket. You can use that money to buy another property or spend it however your heart desires. As long as there's a tenant occupying your property, you will get paid month after month after month after month, regardless of whether or not you go to work. Pretty awesome, right? That's not factoring in the fact that the property is being paid off and building up equity. Oh yeah, you are making money in the long and the short term at the same time. Yes, you can kind of do that with the stock market in the form of dividends, but let's face it, the rates are so much better for real estate. Number 3, highly tax advantaged. Now notice I didn't say limited. Real estate has the best tax codes out of any investment that I'm currently aware of. The tax laws favor real estate. They are meant to encourage you to buy real estate. Why? Because it creates jobs. Architects, gardeners, construction workers, roofers, plumbers, electricians. The list can go on and on. Lawyers. As always, consult your tax professional because there are ways to not pay capital gains tax, or more correctly, defer capital gains tax by using a 1031 exchange. I made a video on the 1031 exchange, and I'll go on ahead and link it up above. There is no limit on how many times you can use a 1031 exchange, so in theory, you can avoid paying capital gains tax forever. Or at least until they change the tax codes. There are depreciation write-offs and several other write-offs that you can take advantage of. Once again, consult your tax professional. Number 4, there's no such thing as insider trading in real estate. The SEC is the watchdog for the stock market. There's nobody that does that in the real estate industry. It's impossible because all the information is already public. You can strategize your purchase. It's called due diligence, and it's actually encouraged. Complete hypothetical. There's a huge tech company that is about to move into your city. You go to city planning and find out that this is the case. You look at the map and you realize that the tech company has to buy a lot of plots of land in order to make their building work. Let's just say that you happen to know that plots of land in that particular area are very inexpensive, and you go out and buy a plot of land that people think is worthless. But now that you own it, that big tech company has to go through you in order to make their building possible. And because of that, they may have to buy the plot of land off of you for a very high price. You just made a pretty hefty payday, all because you knew information that not a lot of people knew. And then there's a case where someone holds on to a property for too long and developers just start building around them. Don't lose your leverage. Number 5, it's a need. People need somewhere to live. Good economy, bad economy. People will always be leasing. Rentals, especially in very densely populated areas, are almost immune to whatever is going on in the market around it. When the housing crisis happened in 2007, 2008, rental prices stayed relatively the same. They didn't have that drastic dip because people need somewhere to live. And in a good economy, rental prices just go up because people can afford to pay it. Number 6, it's easy to understand how it's priced. With a CMA, or a comparative market analysis, or as I personally like to call it, a competitive market analysis, because you are competing with the other houses that are on the market, it's easy to understand how a house is worth what it's worth. And now for the cons. Number 1, the startup is not easy, especially in comparison to stocks. First, you have to research a good property. the due diligence thing. Then you have to purchase it. After that, if the house needs any repairs, then you have to have a team ready to help you do it or just do it for you. And that's just the first half. Then you have to find a tenant and then do all the work that goes along with managing a property. It's not impossible, but it does need a lot of upfront legwork. Yes, you can always hire a management company to come and manage all your properties, but chances are at this level, it's better to kind of just do it yourself. Then you have to have that management side running. What if you have a bad tenant or hail damage? It's relatively hands-on in comparison to stocks. Number 2, you have to have funds. Unlike stocks where you can open up an account and start investing with as little as $5, in real estate you'll need a couple $1,000 depending on what market you're starting in. You can be self-funded or you can have someone backing you. Regardless, you need money to start. The silver lining is that you weed out a lot of those emotional investors because it's not that easy to get started. Number 3, it's not a liquid asset. Let's just say you want to sell that property. Well, that can take anywhere between 30 to 45 days after you've accepted an offer. The time it takes for you to receive an offer can vary wildly. So getting your hands on your money quickly isn't easy, which prevents emotional decisions. And because of that, unlike stocks, where let's just say your stock is worth $6 and you sell it for $6, in real estate, on the day that your house gets put up for sale, it could be worth $100,000. But the market could change, and you may have to accept an offer that is either A, higher than you expected, or B, lower than you expected. It all depends on what the market dictates. So, which do I choose? I choose both. I obviously lean more towards the real estate side. I believe in diversifying and putting your eggs into multiple baskets. I don't know when, but there will come a point when real estate isn't doing so hot. And there will come a point when the stock market isn't doing so hot. I will admit, I hate the fact that in the stock market, I'm paying into something that in 40 years from now, I'll know if I made a profit or not. I do prefer money right now, which is why I love real estate. But I do try to follow Ray Dalio's all-weather portfolio as much as I can. Once again, what works for me may not work for you. Question of the day, what do you prefer? Real estate or stocks? Go ahead and comment in the comment section down below. Well, that's it for this video, folks. If you found this video entertaining or informative, go ahead and smash that like button. Subscribe if you haven't already. As always, if you have any questions, please feel free to contact me. My contact information is down below. Catch you guys next week. Peace.